Hi everyone, myself Prithvi. Today welcome you all for my YouTube channel. In this video, I would like to discuss about the fundamental analysis of a company called MGL. MGL means Mahanagar Gas Limited. So it's in the city gas distribution space where the main source of revenue which comes to the company by gas distribution. So let us understand how the company generates revenue from gas distribution. Firstly, the gas is being supplied from the GAIL and OMC. OMC means oil marketing companies, where the gas is being supplied, that is stored in the gas station, and that is being supplied to the households, industry and commercial use through the gas pipeline infrastructure which the company has developed. Nextly, the company also operates CNG stations. Nextly, totally the company gives a service to 15 lakh households domestic PNG. Next, 4061 commercial and industries. Next, the company also operates CNG stations fueling 7,70,000 vehicles every year. So this is the main source of revenue for the MGL company. So MGL is operating in Maharashtra, wherein Mumbai, Thane, Mir Bhayandar, Navi Mumbai. They are also expanding their capacity in existing areas like Ushal Nagar, Ambarnath, Dombivali, Kalyan Nagar. In these are all the areas they are expanding their capacity, and in these areas, next in the 5 to 10 years, they are also planning to expand their capacity in the southern districts of Navi Mumbai, the Raigad districts, that could actually boost their revenue and profitability in the future. So this is all about the company business structure, how they will going to generate revenue. Next, let us analyze the advantages and future growth outlook for MGL company. First positive point for MGL company is that they are currently operating in the area of populated of 2 crore people with having 30 lakh households. But they currently giving a service to 15 lakh households itself. Still they have twice the current capacity what they are having, the potential which can double their profit, double their revenue. The next positive point is that the company, when it compared with the LPG and PNG, LPG gas used for kitchen households and PNG used for kitchen households itself, when you compare that LPG with the PNG gas prices per year, LPG cost 7,728 rupees, but PNG cost 6,468 rupees. Almost 1,260 rupees is the difference between the LPG and PNG. PNG is cheaper than LPG when it compared, almost 16% cheaper to the LPG. The next positive point is that the CNG which is given by the MGL, which is almost costing 47.90 rupees per kg. But when it compared with the petrol and diesel, petrol cost almost 95 to 96 rupees, diesel cost 86 to 88 rupees. Almost CNG is 40 to 48 rupees cheaper than when it compared to the petrol and diesels. So it is one of the very big advantage for the MGL companies to increase their profitability in the future. The next positive thing for the company is that there is no replacement of the LPG cylinders, which is the problem for the consumer in the retail side. If the LPG is getting empty, they want to contact the gas agencies, then they want to replace that LPG cylinders. But when it compared with the MGL gas is being supplied to the kitchen through the gas pipelines, where the risk of leakages will be taken care by the MGL companies, that you need not to have any kind of a problems. It will be periodically checked. It is one of the very safety thing. So this is all about the positive things and the future growth outlook about the company. So what is the negative thing about the company is that, which I found out in February 2021, the oil marketing companies has demanded to increase their gas prices per kg from 4 to 5 rupees to 7 to 8 rupees per kg. So this one is the major point which is going to put a margin pressure on this company. If there is an increase in the prices of the gas is being supplied by the OMCs, definitely the margin pressure is going to come to the city gas distribution companies, not only to the MGL, even the IGL and GAIL. Many companies will be impacted by this. That's one of the negative point about the MGL. Other than this, there is no much negative point about this company. So this is all about the business of the company. So next, let us look at how the company has been started from the beginning. So the MGL company is incorporated in the year of 1995 with a joint venture with GAIL, a BG Asia Pacific and Government of Maharashtra. In 1995 and 1996, they started giving a first connection to the households in Maharashtra. In 1996, they started a first CNG station in Maharashtra. In the time span of 1996 to 2001, they built almost 1100 kilometers of gas pipelines and giving a supplies to 1 lakh households in the time span of 5 years, and with the 25 CNG outlets fueling to 35,000 vehicles every year. In 2005, they entered into the place of giving a gas supply to Thane. Next, in the 2006, they have entered in the place of Mir Bhayandar to expand their capacity. Next, in the 2009, they have entered in the place of Navi Mumbai. So almost in the time span of 10 years, they started expanding their existing capacity to different areas to improve their profitability and the revenues of the company. Next, they currently having a plan to expand their capacity to Raigad districts. That is another big opportunity for MGL company to expand the revenue growth and the profit. In 2016, the company MGL entered into the stock market. Nextly, the company giving a service to almost 15 lakh households and having a gas pipeline of 5,200 kilometer gas pipeline, having 256 CNG outlets, dispensing point of the 1,300 dispensing point, fueling to almost 7,70,000 vehicles every year, and giving a supply to industrial and commercial PNG to 4,061 commercial use and industrial use. So this is the current service which they are providing in the gas distribution space. So this is all about the story of the company. So next, let us look at on the shareholding pattern of the company. So when it comes to the shareholding pattern of the company, the promoter is holding 32.50%. Next, the FIS is holding 31%. So in the recent 2 quarters, they have increased their stake in the MGL company. Next, the domestic institutions, which holds almost 17%. In the recent quarters, they have decreased their stakes in the company. Next, the publics hold 9.22% in the company. The government of Maharashtra, which holds 10% in the company. So conclusion about the shareholding pattern is that the FIS and DIS is holding almost 45% stake in the company. Recent 2 quarters, the foreign institutions are increasing their stakes in the company. The publics are decreasing their stakes little bit. It shows that future growth outlook of the company is very good. So that one positive thing about the shareholding pattern. So next, let us analyze the financial statement of the company. So when it comes to the financial statement of the company, so the company sales are increasing with the CAGR of 14% in the 10 years. So the profit is growing at a 17% CAGR in the 10 years. So next, from the 2009 to 2020, the sales figure is continuously increasing. That's one of the very good positive thing. So next, the operating margin is also increasing. In the middle, in the 2015, the operating margin was decreased to 23%. After that, so it is significantly increasing since from then to 41% in the current year. So since the MGL is not yet declared the Q4 results, so which we have to see, we can expect good results from the MGL company. So the operating margin is also very good. So the profit after tax is also continuously increasing, but in the trailing 12 month, in the FY21, so because of the COVID reason, so the June quarter was been impacted. Because of that, the earning per share has been dropped, revenues have dropped, profit has dropped, and the operating margins have dropped. So that is one of the major concern in the FY21. Other than that, the company seems to be very good. So the conclusion about the financial statement is that the financial statement is of the MGL company is very good. So next, let us analyze the financial ratios of the company. So when it comes to the financial ratios of the company's current stock price is trading at 1,124. So the debt to equity is 0.02. So the debt which is having in their books is 63 crores. Only it is a less debt, which is one of the very good positive thing about the company. So the price to earnings multiple is 19 times. So when we compare that with the IGL and Gujarat Gas, it is still trading 11 times lesser than the peers of the company in the city gas distribution space. So the average PE it is trading at 17.8. So it's still trading higher than that. So it is need not a concern because of the June quarter washout. So the earning per share has been decreased. Still it is trading at a discount when it compares to the price to earning. So the return on equity is 31%. So the operating margin which is operating at the current year is 41%. So when it comes to the cash flows, so the operating cash flows of FY20 is 983 crores. So the free cash flow which is generated in the FY20 which was 547. So in the near term and in the future also, we have a good future for the company because of the expansion plan which they are having. So this is all about the financial ratios of the company. So it's a time to give a conclusion about the MGL company. MGL company is in the city gas distribution space. So when it compares to its peers like IGL and Gujarat Gas, it is still trading at cheaper valuation, which is almost discount to all its peers, which is one of the very good positive point about the companies to pick at the current levels. So which is one of the opportunity for retail investors like us to pick these stocks for the future outlook, which seems to be very good. So this is all about my analysis. If you want to take a positions or to enter into the stocks, please consult your financial planner before entering into the stocks to have in the profitable zone. So this is all about my analysis. In the next video, I'll be coming with a lot of fundamental analysis of different companies. Please do like and subscribe to our channel to receive the further notification about the fundamental analysis which I'll be doing in the future. Thank you all. Bye bye.